Welcome to the Hill and Viteri Property Market Roundup for the January to March quarter of 2021. The year has opened with arguably the strongest housing market ever seen. The demand for housing even stronger in the first quarter than it was in the last quarter of 2020. In our last market roundup, we commented that buyer confidence had returned. Well, confidence has turned into fear. FOMO has set in with buyers fiercely competing for houses and driving prices up rapidly in the quarter. It really is a two-tiered market though, with the strata market and housing market moving very differently. We have seen gains of 20 to 30% on housing over the period, where units have had a marginal improvement. So the median price that's being reported is not really reflecting the real market movements. Our auctioneer, Michael Burley from MVP Auctions, reported a clearance rate of 89% in the quarter. This is despite the number of transactions being significantly higher. We have seen the volume of properties coming to market at twice to 3 times the normal rate this quarter. However, buyers continue to say there's nothing on the market. This is because the rate of absorption is so high. And what I mean by that is despite the increased supply, the demand is still stronger, so properties are being snapped up quickly. An example of how the market has moved in the housing sector is 22 Taft Place in Bonnet Bay. First assessed in mid-January, it hit the market in early March and sold in late March. This property had 220 inspections, 46 contracts were issued, and pre-auction offers ranged from between 1.43 million to 1.63 million. These offers were comparable to recent sales for similar properties. However, the auction saw 19 buyers register, and the property ultimately being sold for 1.935 million, which was 235,000 over reserve and some 400,000 over our initial appraisal approximately 10 weeks earlier. This is a great illustration of how the housing sector has moved. We've also noticed more buyers coming from out of the area. Places like the eastern suburbs, the inner west and St George, and this is probably due to affordability pushing these buyers further out, but also possibly flexible work arrangements becoming more the norm. Now in the apartment market, we've seen some more promising signs. Our agent Chris Fellis selling 12 at 55 Glencoe Street in Sutherland for $613,000. This was a huge gain on the previous sale in the complex just only a month earlier in February, which sold for $540,000. We are continuing to see buyers favour the older full brick walk-ups over the modern high-rise apartments. We're also seeing a number of our landlords selling and cashing in their chips. This could be a reflection of those who chose to hold through the depressed COVID period and now see the current conditions as favourable. Lee Anderson, our head of property management, has made the following observations in the rental market. Quality houses are in short supply. This is due to owners moving back in and investment houses now being sold. This lack of supply has pushed up prices some 5 to 10% for this type of property. The lack of investors buying has seen supply reduced, but also tenants becoming first home buyers has seen a decrease in demand. For those with a deposit, the low interest rates almost make it just as affordable to buy a property. So I would say at this time, the local property market is strong and all signs are pointing towards this continuing to be the case in the next quarter. In fact, most of the housing commentators and analysts now agree on this for all of 2021. Now the current rate of gain can't continue forever and eventually the pool of buyers will thin and prices will stabilise. But if COVID has taught us anything, is that no one can really predict anything with any certainty. I'd like to thank you for watching our quarterly market roundup and I look forward to seeing you next quarter. Thank you.